Welcome to Kai Finance. Here we break down the secret moves of corporations and global elites on the world stage. Hit subscribe and leave a like so you never miss crucial inside information.
Yeah, and today we're looking at something the financial elites are desperately trying to keep out of the headlines.
Right, because you, the listener, you're probably worried about inflation, maybe a market crash, the US dollar collapsing.
But while the masses panic about the dollar, shadow offshore crypto companies are quietly buying up billions in US Treasury bills.
Exactly, they are essentially funding the US government right now.
It's a massive shadow banking bomb. Let's explain the mechanism of how they actually acquire this government debt. Think of stablecoins, using a casino chips metaphor.
Okay, so like you walk in and hand over your real fiat dollars to the cashier.
Yeah, and they give you digital chips in return. But what does the company actually do with your real cash?
Right, they don't just shove it in a vault.
No, they take those billions and they buy U.S. government debt.
Which brings up the yield. If you compare the yield potential of these assets with traditional instruments like regular bonds,
It's insane. Everyday investors are fighting for safe yields, but these shadow companies are absorbing the risk-free rate on tens of billions of dollars. They keep the yield, you just hold the digital token.
it's incredibly profitable. But there's a paradox here that is just mind-blowing.
I mean, crypto was originally built to destroy the traditional fiat system, right?
Yeah, to completely bypass central banks.
And now it is the biggest buyer keeping the US dollar alive. They are actively propping up the very system they wanted to replace.
So if you're trying to figure out how this phenomenon might affect your personal investment strategy in the next year, you have to realize the firewall is gone.
Entirely gone. Your traditional portfolio, your retirement, it is now deeply tied to the crypto ecosystem.
Which leads us to the terrifying question.
Yeah, let's hear it.
What happens if there's a massive crypto panic and these unregulated companies have to dump $100 billion of US debt onto the market in a single afternoon?
That is the nightmare scenario. If they have to liquidate that fast to pay back users, that massive sell pressure bleeds directly onto Wall Street.
It becomes a transmission mechanism for absolute volatility.
Right. And regulators know this. So if we look at the expected actions of regulators regarding stablecoins owning this much government debt,
They're going to have to step in.
they will be aggressive. You cannot have shadow entities holding the national debt hostage. They'll try to either force them into traditional banking frameworks or shut them down completely.
To wrap up with a brief summary on the systemic stability of the financial market in light of these events, it's basically a house of cards leaning on a digital casino.
That's exactly what it is. The traditional risk models just aren't prepared for this level of interdependence.
So I want to leave you with this final thought to mull over. If these shadow networks continue to absorb more and more government debt, will the traditional U.S. financial system eventually find itself totally reliant on the alternative digital systems that were originally built to destroy it?